Hello there, Leigh Martinuzzi here from MPG with your weekly real estate market update. I hope you're having a fantastic week and thank you so much for tuning in. This week there's been quite a bit of buzz around the latest economic data, so let's dive into some of those highlights and what they mean for the property market, particularly here on the Sunshine Coast moving forward. First, the ANZ Roy Morgan Consumer Confidence Index shows that overall confidence is actually slightly down by 0.8 points. And it's still below the 85-point benchmark set by the ANZ Roy Morgan. While this is an improvement on last year's figures, it does show that consumers are cautious, especially with economic uncertainty ahead. So most people polled are expecting tougher times ahead over the next 12 to 24 months. And this could impact consumer behaviour, particularly spending on some of those big ticket items like household items and property. Now let's talk interest rates as well. This is important. There's a lot of debate around the RBA's rate hikes and how they're impacting the economy. Recent GDP data for the June quarter shows that we had Australia's slowest economic growth since the 1990s, and that's indicating obviously a real strain on household budgets. And Governor Bullock, the governor of the RBA, recently noted that if inflation remains high, we will unlikely see a rate cut anytime soon. Now, that's not what the big four banks are saying, as I reported last week. She further went on to say that 5% of owner-occupiers with variable loans might need to sell because of that financial pressure. It's a tense situation and certainly tense for some. And while most, I think, will hold off from selling under financial pressure and they'll just tighten the budget on other spending, I'm not too sure what this will mean for the property market moving forward. On the auction front, we're starting to see some early signs of a shifting market dynamics. Last week's auction clearance rates were low. They dropped to 58%, and that was down from 68% the previous week. Now, that suggests potentially cooling in buyer demand. I actually, however, believe that the Sunshine Coast will remain strong this spring, with more sellers entering the market and a steady influx of buyer interest. Pricing and presentation will be more crucial than ever to stand out to buyers, as they'll have more choice and they will be cautious not to overspend where they can't see good value. But I don't think we'll see prices drop. If anything, I think on the Sunshine Coast at least, we will see a continued steady increase in growth, in property price growth, that is. Martinuzzi this week reported on the undersupply issue of new builds particularly, and suggests that we have a undersupply issue, the worst in 30 years. And new buildings definitely is seeing the pinch there, because the cost to build a new 4-bedroom home in suburbia here in Australia is now around $550,000. That's just for the build cost alone. So that suggests to me that we'll see more first home buyers and we'll see more second home buyers move towards established properties, as they will see more value in established properties, because the cost to build and also to find land will be a challenge. And the time to build will be a challenge as well. So I think that'll push more people into the established property market here on the Sunshine Coast at least as well. So that's probably refreshing news for homeowners that are thinking of selling in the next 6 months or so. So that's pretty much my weekly market update. There is more in my report this week. You can check it out at my blog at martinuzzi.com.au. And again, as always, if there's anything we can help with, please reach out at MPG. We're here to help you live more fully, have more meaning, and find more joy on your next property move. We'll talk soon and see you next week.